As of right now, Monday, May 11th, 2026, the market is currently open for the morning session, and IREN Ltd is trading at $60.76 per share. This represents a slight intraday dip of 0.72% compared to the previous close, though it comes on the heels of a massive surge where the stock climbed over 7.6% in the prior session. While most people are looking at this morning's minor pullback as a sign of exhaustion, the reality under the surface is that institutional positioning is reaching a fever pitch. We are seeing a total transformation of this company's DNA, and the volatility you see on your screen is just the market trying to price in a massive change in identity that many investors haven't fully grasped yet. The expectation in the market is that IREN is just another crypto miner trying to stay relevant by pivoting into data centers, but the reality is far more aggressive. Late last week, the company dropped a bombshell, a 5-year, $3.4 billion agreement with Nvidia. This isn't just a supply deal, it's a managed cloud services contract where IREN will be running Blackwell systems across their Texas campus. If you are looking for investment help or using investing sites to track the next leg of the AI trade, this is a massive signal. The market generally believes that Bitcoin miners are low-tier infrastructure plays, but Nvidia giving IREN the right to buy up to 30 million shares at a 70 strike price suggests they view this company as a core partner for their Blackwell hardware ramp. This creates a curiosity loop for any serious trader. If the world's leading chipmaker is willing to lock in a multi-billion-dollar partnership and take an equity stake interest, why is the stock still trading nearly 15% below that $70 warrants price? The recent movement has been nothing short of a roller coaster. We saw a 13% swing between the intraday high and low on Friday, which tells us that the battle between short-term profit takers and long-term institutional accumulators is intense. Trading volume exploded to over 110 million shares, more than double the average daily volume. For those using a Fidelity brokerage or the Robinhood app to track these moves, the technicals are flashing a strong buy across short and long-term moving averages, even if the RSI is screaming that the stock is temporarily overbought. When we see volume rising alongside price like this, it usually indicates that the smart money is stepping in to support the move rather than just retail speculators chasing a headline. Institutional activity is particularly interesting right now. We saw International Assets Investment Management recently move nearly $1 million into the stock, and while some funds like Artemis have trimmed, the consensus is shifting toward a buy. If you look at the individual brokerage accounts across the street, the sentiment is no longer about mining difficulty or halving cycles. It is about power. IREN has secured a 5 gigawatt power portfolio, which is the equivalent of gold in today's market. Most people don't realize that building a data center is the easy part. Getting the grid connection for 1.4 gigawatts, like they just did at their Sweetwater 1 site in Texas, is a process that can take years. This gives them a massive head start over traditional tech companies that are still stuck in the permitting phase. Despite the recent earnings miss, where they reported a net loss of over $247 million, the stock didn't collapse. Why? Because the market looked past the old Bitcoin mining revenue and focused on the 94% surge in AI cloud services revenue. This is the classic tension between expectation and reality. Investors expected a rough quarter due to the decommissioning of old mining hardware, but the reality of their AI expansion was so much bigger that the miss was ignored. They are targeting $3.7 billion in annual recurring revenue by the end of this year, and they already have over $3.1 billion of that contracted out. When you consider that their current market cap is sitting around $20 billion, a $3.7 billion revenue run rate on high-margin cloud services starts to make the current valuation look very different. I want you to take a second and participate in the discussion here. Comment below how many shares of IREN you currently hold, or if you think the shift from Bitcoin mining to AI data centers is a permanent trend for the industry. It helps to see where the community is leaning on these high volatility plays. Let's break down the business model for a moment for those who are new to the ticker. IREN, formerly known as IREN Energy, started with a focus on high-performance computing powered by renewable energy. They built their reputation by setting up large-scale Bitcoin mining operations in places like Texas and Canada. But their real value isn't the Bitcoin they mine, it's the physical infrastructure they own. They have the land, the high-voltage substations, and the cooling systems required to run the hottest, most power-hungry chips on the planet. By acquiring companies like Mirantis for $625 million, they've added the software layer, Kubernetes orchestration, and AI platforms needed to move from being a landlord of servers to a full-stack AI cloud provider. Looking at the competitive landscape, they are positioning themselves against names like CoreWeave and even some of the smaller offerings from major players.
If you use a SoFi trading platform or Interactive Brokers trading tools, you'll see they are frequently compared to other miners turned AI players, but IREN's scale is becoming difficult to ignore. Their acquisition of Nostrum Group in Spain gives them a European foothold with another 490 megawatts of power. This isn't just a Texas story anymore, it's a global infrastructure play. They're diversifying their geographic risk while aggressively locking in GPU financing and customer prepayments to fund their massive capital expenditures. The future outlook here depends entirely on execution. The catalysts are clear: the commissioning of the Nvidia Blackwell clusters at the Horizon sites later this year, and the continued ramp of the Sweetwater campus. The risks, however, are just as real. They have a high debt load with nearly $3.7 billion in convertible notes, and the dilution from their $6 billion at-the-market share program is a constant weight on the price. If the AI demand slows down, or if there are delays in getting those chips delivered, the cash burn could become a serious issue. But right now, the momentum is on their side. In summary, the market expected IREN to struggle with the transition away from its crypto roots, but the reality is that they have successfully rebranded as a premier AI infrastructure partner. The $3.4 billion Nvidia deal is a stamp of approval that few other companies in this space can claim. While the intraday price of $60.76 shows a bit of caution from the bulls today, the long-term setup is focused on that $3.7 billion revenue target. We have seen a stock that was once a speculative mining play transformed into a serious contender in the AI cloud space. The tension between its past as a miner and its future as an AI factory is exactly what is creating this trading opportunity. Stay sharp, keep an eye on the volume, and watch that $70 level closely, as it represents the point where Nvidia itself sees long-term value. Whether you're managing a Schwab Intelligent portfolio or doing self-investing through a mobile app, this is a story of infrastructure power meeting the AI demand in a way the market is only just beginning to value correctly. Disclaimer: this video is for educational purposes only, not financial advice. Please do your own research before investing. Market involves risk. Like this video, comment your thoughts, share with your friends, bell notification for more updates.